Greetings, market rebels. Welcome to this week's macro measure video combined with our sector situation video. There it is. It is Friday, June 27th, 2025, and it's 3:32 p.m. here on the East Coast. My colleagues are keeping an eye on UOA for me so I can get this stuff addressed and hopefully help out a little bit for next week. Here's our trusty disclaimer for Market Rebellion. Here is our trustee intellectual property rights notice from Market Rebellion. And then here is last week's slide. I just left key highlights about really about the action, right, from last week, that our discussion. Here's one, SMH put buyer, news neutral, where are we? Most likely depends on news from here, news developments like we dictate. So those are the simple highlights. And that's what I'm going to talk about a little bit on this week's slide, which I'll leave up here for a little while and then start getting into it. But I'm going with real or manufactured because, I've been doing this for a long time and watching markets for a long time. And I really am starting to wonder about how neatly everything's been packaged lately. It just seems like the last several years, things become more and more almost like packaged, and then news stories are just sort of announced. We just had one today, as a matter of fact, with some sort of a issue with the trade negotiations, tariff issues with Canada, and that brought some profit taking, as you would probably expect to see anyway, after the kind of week we've had. But it's sort of like these stories just hit it, and these developments just hit, and they're almost too perfectly sort of wrapped up in ribbons at the right time. And it seems like folks are getting the jump on this stuff more obviously than at times in the past. So I'm not sure exactly what's going on. That's certainly above, my level of security clearance. So I don't know exactly what's happening or has been happening for the longest time, but things like wars breaking out and sort of like, uh, bombing missions, things don't always go according to plan. And it just seems as though the way that I don't know, the US corporate media, the way things get reported and have been now for some time just becomes, I don't know, hard to say, just less and less, sort of, less and less real to me. And I guess it's just starting to seem, and has been for a while, but I'm just raising it now, more and more manufactured. I just don't remember things really just sort of tied up so neatly all the time, and everything just keeps working. And that has nothing to do with like being a bear. This has nothing to do with just this last week. It has to do with just overall years and years and years. So I don't know what's happening, but I find it to be something's off and it's odd to me, and I can't get over that. So I thought I would just mention that. But this is really just about real time. I had such a little time to look at things. Um, all I'm going to say, based on the highlights that we had on the prior slide, is that's why I come in with that news neutral assumption every week. Because, right, you can read the charts, you can read the charts, you can read the charts, do the best you can objectively, and then you get news like that where not only are the bombing runs or whatnot over, they're supposedly very successful, it's over and done. They're anticipating really almost like uh, a for show retaliation, which they got. That's over neatly, and generally things are all like back to perfect clockwork harmony. That's kind of what I'm getting at. And so, if you had said, right, well, this thing's all going to be wrapped up essentially by Monday morning, and there won't be any reverberations, tremors, aftershocks. The market likes that, right? The problem is theoretically behind the market. So that's what you got, right? So you got a lot of people probably were positioning last week, not really realizing that this was all going to be, as one of my favorite old time actors said in uh, Double Indemnity, to paraphrase, with ribbons on it. I think that was an Edward G. Robinson line from Double Indemnity, right? Because this is just, it's all over. Hey, everything's over. It's all good. Don't worry about anything. Let's start buying stocks again. And I think that probably, given how we saw, I think some folks bailing and some people positioning with some hedges or speculative things that were bearish ostensibly, that helped jumpstart the week. And then we went on from there. And as we've said many times in these one-sided discussions, that when you're in uptrends, you tend to get news cycle. The news cycle tends to favor the trend direction, right? So you get good news when you're in uptrends generally, and so-called bad news when you're not. It still remains pesky. Again, I would just say look at today where things look like they were going to close out on a really high note. They may still, but we definitely had this sort of a little bit of a swoon, not quite a 1% swoon from the highs, but a high that was looking pretty darn good until the afternoon. And then we get these challenging trading times with an extra S for emphasis times. So this is just proof to me, right? You hear me sort of complain because I help Ryan a little bit with some of the premium collection. But by and large, he's handling that mainly, and I'm looking more at momentum and UOA type trading for the services that we support. And you have this situation where you get frustrated, right? Not every we know that not every week can be a very strong week, and that's why you've got to hang in there. Like when you take a trial, you've got to hang in there when you take a trial of someone's service, not necessarily ours, but if it's related to the market, right? A lot of this gets dictated by the macro, which is why we cover the main major market ETFs because things we've found, right, that things tend to be perform better typically when the market itself is either rising or falling with some momentum, So that's what we had this week with a lot of really great things after hearing me complain about terrible trading weeks that preceded this one. But that's what it is about trading, right? You've got to be in there week in, week out. Because when you get stuck in consolidations, we know that strong impulsive action usually follows breakout type action usually follows consolidations. And after you've had a good run of that, you tend to get consolidations, right? And you kind of go back to the other phase. So I'm just noting that with good follows bad, and things like that, where movement follows consolidation. So you just that's what it is. So we finally got the payoff this week with a lot of things. I'm going to leave this one up there. I'm going to say that air pockets will only matter. The ones we've been discussing now for a while will only matter, right, if this is a false breakout. So let's not forget that there's still false breakout potential. Again, not calling it a false breakout. I'm just noting that these are the things we can't lose sight of in my mind. And I did just note why I think last week the news neutral assumption is so important during times like these. And by that, I mean during the days of Trump, right? Trump is just a different animal that way in terms of news making. And he's not bashful about making news. And you may perceive it as good, bad, or ugly. But whatever the case may be, that's just the nature of Trump. So I think Trump is disruptive. He can be disruptive, and sometimes I think it's purposefully disruptive. So maybe he's got something figured out there. I don't know. But yeah, that's what we're up against. And so you've got to really, again, I harp on it all the time, and you got to be really disciplined when you're dealing with this type of an administration. It's just different where you could not really do this from your easy chair as easily as you can, kind of in other sort of staid times, let's put it that way. So just a quick note on that. So what I would like to talk about, and then we'll get into charts, but I really want to talk about this UOA positioning. Okay, so I'm gonna do a little quick pause here for us and we'll start to shift things around and I'll bring them back up again. And I just want everyone to sort of see what I mean because I have not necessarily pet peeves, but I really don't like to see folks get caught up in a certain type of mindset that can be limiting. And to me, you can get limiting mindset if you think exclusively in terms of just calls or puts as someone being a bull or a bear. So what I'm going to do is bring up some stuff here. Let's get the right screen for starters, screen 3. We'll share that one and then we'll make sure there's a chart to work with. And I think what I may do is I may sort of shift this off to the side a little bit so we can sort of do like a one-sided thing and another sided thing. So let me just minimize that for now. And we'll come back to some of these things. But this is, I think, going to be helpful to you if you're someone who does trade UOA or is thinking about it or wants to look at it if you're new, right? If you're on the newer side of things. And the reason why I'm bringing this up is because I always pay attention to when there's a flurry and the UOA is picking up. So it's a lot like when we get a pickup in the trade rate during intraday. When you start to see things start to fire, you kind of know that something might be brewing, right? So let me pick up from where we were. Now, things can shift very quickly, as many of you know. That's just the nature of the market. So coming in the week before with some of the poor action that we saw back to close out last week, we had a VIX hit, which I noted last week. We had someone playing TSM to the downside, theoretically, right? Maybe. And then you had SMH, and these were some bearish ideas that I try to put in the log to have ideas for folks to go to in case news suddenly shifts things, right? That's the general idea that the folks that are in that service, I want them to be able to see that. I mean, sorry, I should say, yeah, see ideas that are primed to jump on that are waiting for them, right? That's the whole reason people are putting the time and money towards a subscription like that. They want to have ideas depending on what's unfolding in the markets that they can get to and hopefully latch onto and profit. And I think the folks do a great job, and they've been doing very well now for many, many years. But I'm just trying to show you how dynamic it is. So you get this VIX stuff happening, you get the SMH, right? You get this big put buyer. So let's click on what was initially put out as Intel, and this was last Friday, the 20th. And we had someone buy these downside puts for the 240 strike, 10,000 of them. I think I covered this last week, but I'm just going to go into more detail for people because this is something that if you're in the service or you're thinking about it or you just look at UOA on your own some other way, right? Just think about someone bought those $20 out of the monies right there on that day, and look at the SMH performance since, right? They come in, they test the low, reverse, and then they go pretty much all week. And so does that mean that this person was, let's say, not smart money? This is where I think a lot of people get lost. Now, if you're new or if you're newer, I was a market maker for many years on the Philadelphia Stock Exchange along with Ryan, my partner, along with Greg McDermott, who we work with as a colleague, and along with Ron Ianieri, who has passed on. And we've done things over the years together. We all traded on the floor together way back when. And so we all know options theory fairly well and the synthetic concepts. And therefore, right, we know that when someone buys a put, it doesn't necessarily mean that they're bearish, right? It's sort of like the expiration time remaining, right? That's a factor. There's all kinds of factors that you could consider. But um, on this one, right, I thought it was just given what could happen with the market and the market sort of losing a little bit of luster technically on the sector basis, on the market breadth basis, on a momentum basis, not knowing how the news could develop over the weekend or the next following week, because I did not know that Trump had something up his sleeve right for that weekend. I wanted folks to have something in place in case we started breaking back down because we failed to break out, right? So I'm going to get that idea in place, not knowing the future, and this way people have something to go to. But right, I don't include this in every write-up, but my thoughts were, right, there certainly could be a hedge. You just don't know, right? Someone might say, well, I want to hedge down, I guess it would be like somewhere between 5 to 10%. I like to have a hedge down there to protect myself. Or someone might say, I'm stepping in now and I want to buy puts in stock, essentially, in this case, puts in ETF shares, because I'm ready to, I think that, this thing's about to blast off finally. And so that's very common in professional circles that funds and players essentially do that. They do the synthetic equivalent, in this case, the synthetic equivalent of a long call. That's likely what happened there, right? So this is why I think it behooves you to position yourself with ideas on both sides of the market. And then when the news starts to break, when you're in a news driven environment, first of all, and the news starts to break, you can react with these ideas that you've already sort of pre-qualified, pre-examined, right? So if this looks like a waste of time, it was, but it wasn't because we can't know the future, right? But so we just have to prepare for it ahead of time. We have to anticipate. And so this happened in a bunch of stocks where there were some bearish, ostensibly, this is ostensibly bearish UOA hits or UOA activity. When we already saw that I put a TSM one in on the same day, and look what TSM did this week. Okay, but just to show you, of course, right, we're not going to wait around and just say, oh, shucks, we wasted some time. That didn't work out. What are we going to do now? Right, and just kind of pout about it. We reverse things around. Naturally, right. I think in SMH, because I thought the chart actually has looked good and interesting for a while, we used SMH in Rebel Pit Pro, our momentum service, and it had a great week for the folks in there. As far as TSM goes, I think that I put TSM in here. No, that actually we use TSM in. We actually, I think, use TSM in UOA Essential, which is going to be right there. I believe we used it in here. So let's see what happens when I pull that up. And I think we had that in here. There it is. Yeah. So let's see where the guts of that were, because we did get early in the week, right on Monday, we got TSM, let's say ostensibly bullish activity, where someone came in and they bought, uh, this is what they did. So what are you going to do, right? Are you going to wait around and say, oh, I thought this was going to be a bear move? Then the Trump news is, like I say, it was basically tied up they put pretty ribbons on it, and the whole thing was over. So the market could not even really go into full panic mode. They sort of short circuited that. And then you get this bullish call roll in TSM. And if you notice, right, they're still staying within the monies, which to me is an underrated thing to spot that a lot of people just brush off. I don't do that. I personally think, it's worth keeping an eye on it. And so, even more so than typical UOA in my book, to be honest, but I don't want to get into all that. But anyway, we triggered this thing at where? Let's see where the TSM, the 215.50, and the stock runs up, $14 from there. So that's how quickly, right? We're not people. I think some people that are newer get frustrated because they've sort of been taught to believe that if someone puts out something bearish, that they're bears and they're just going to stick it out and like hang tough through whatever comes their way. And the truth really is, if you're a professional trader, it's a short-term professional trader, you really can't get locked into that kind of a mindset, because the market is so dynamic. And we had a meta idea as well. The meta came in at 695. You could see the week that meta had, right? This idea, I believe, also was part of UOA Essential, but it was also part of UOA Pro. And the difference between UOA Pro and UOA Essential is UOA Essential is just trying to get about 4 to 6 ideas out there per week for folks that are newer to the UOA style of trading. And the way we do it, is our own way that we develop to try to help people that are new. And then once people learn how the game works better, so yeah, here's the meta, and there's your trigger on meta. It was 706. So by the time the idea got put out for UA Essential, it was higher than where the UA hit. But again, I think everyone would take a nice run like that, where the stock runs about $30 in your favor this week. And we had a nice move in BSX as well. So that's all I'm getting at is that you can see put activity, you can see call activity, but ultimately, right, what's really the most important is that you see this flurry of activity and the activity is strong. And there was very strong activity in the in um in the semis. So let me try to show you an NVIDIA idea we had. This sort oh, I forgot this is going to read kind of like redo its thing on us. And that's my fault. So just give it a second. I think the machine always runs a little slow when I'm presenting. I just feel like Zoom just bogs me down bad, especially when Thinkorswim and Zoom are running. It's an issue. So here's NVIDIA. The trigger was 146, but you can see someone came in and bought 80,165 calls. And so I don't want to get into why I like this kind of a hit, but some people are going to say, "Oh, that's just someone got lucky." I've seen them get lucky too many times. That's all I can tell you. I can't go into all this. This is already a tangent, but it's a planned tangent. I don't want to turn it into a ridiculously planned tangent or a planned tangent that became ridiculous. But yeah, I mean, for this thing to make almost right, not quite a 10%, but more like an 8 or 9% move up from when the COA the idea triggered, you're going to take that in a week. You're going to take that, virtually every time. So this is what I'm getting at, right? We had all those names that I brought up. The other one was, let's see, which ones did I bring up? This week is what? So I showed you SMA. Yeah, another one would be AMD. We had Microsoft, right? We had Meta. Let me see if it brings that up for us in here. Let's see if I can get something to show it that way. But yeah, I mean, the AMD was another one. So we're getting, I love when we're getting that kind of um, flurry in these names that look in a sector that looks primed to go, and the names themselves look primed to go. Right? This is basically my argument for why this is the never. I don't want to make it out to seem like this is easy. That's certainly not what I'm implying. I'm just saying that there's reasons why I maintain that trading the long side in a bull market is a lot easier than trading the downside in a bear market. Not that you can't make more money faster. I'm just saying you're better off to me trading on the long side in a bull market. I just think it's easier surfing. You get great rides without as much danger. That's another way to look at it. By the way, I'm not a surfer, but yeah, I mean, that's a really nice move where this thing goes up 12 bucks ish roughly, right? And we got the hit on what was it on, I think maybe it was Tuesday that we got this hit. So you can see in the start of the week, people really started to pile into these semis, and it just really, really set things ablaze, right? So when you see the larger hits that we saw, 10,000, this, that, and the other thing, you got to be ready to just say, like, okay, things did look rough, but this news happened over the weekend. It's all over. They're buying the market. So they waited for this to be over. Now they've got the clearance on that, and they're maybe on their way to finishing out the month very strongly and setting themselves up for July, which is often a pretty strong month because there's a lot of lead up and anticipation into earnings. And sometimes when the earnings are quite good, then that that will help propel things even further. So I talked about Meta already. So the last one I'm going to mention is Microsoft. So let me try to get that one. Oops, clicked on the wrong thing. Let's get the right thing. We'll look at Microsoft and I'll just show you. And they came after. So my point of Meta and Microsoft is they came after big names as well. And that's always another good thing to see because these big names tend to. I'm trying to think of where's that current idea? That's I'm wondering where that's from. I know that something may have. I feel like I haven't been carrying this for that long, but maybe we have. Yeah. So that's my bad. That's just an update. We may have used that somewhere else. I can't remember, but I remember trying to make the case that I think we may have done it in this video that with Microsoft and the kind of hit them going out to August and buying those and then selling this upside call vertical, it seems like, well, isn't that kind of ridiculous that someone would go that far out and that far up when you're only trading near the 457? Because, right, that's going to require a really strong move. But look, we're not even into July yet, right? And they're already through the high strike here. It doesn't mean the spread max out. I'm just saying that it's already through the high strike, right? So it just goes to show you on a $30 wide spread, they've already blown through this. And they continue to buy calls in this. And when they do that, right, and you have this larger hits and you have the follow-up UOA, that's another really good sign. So I wanted to take that detour for everyone because um, this stuff matters, right? Putting it all together matters, and people will they kind of want to learn it all too fast, and I hate to see that because if you are patient and just learn what you need to, which does take some time, admittedly, it takes quite a bit of time and effort, but it's so worth the payoff in my opinion. Anyway, and these all these factors really can sort of help out is my point, right? If you put it all together. Anyway, now on this one, I'm just showing you, this is part of our drivers comments we'll get back to, but you can see, right, we're currently between 425 and 450 on the target rate. This is the Fed watch tool, and they've got it right now where there's a 47% chance, so the greatest percent chance of them all, that we are down at least 75 basis points, roughly speaking. So if you add this, together, right, at these two, you really get over 50%. That's where things are supposedly headed. That's where the market has things heading. So remember, getting back to our stuff we came in to discuss this week, um, right? We talked about the UOA. I will note that some are claiming that we're too top heavy. That was part of why I wanted to show you those bigger names. I don't, I don't have the data on that. I do think there's a little bit of validity to that, but people find all these problems, and they're usually right. I fixed that very. I don't know what happened there. I must have unfixed it, but I remember typing that wrong and then having to fix it, or maybe I screwed that up. Anyway, top heavy, yes, but does it really matter? Not in the short run, right? It really won't matter in the short run, has been my experience. So you can get bent out of shape that maybe you want to see more leadership, this and that. That may still be on the way. And that's what leads me to this next line that I typed. And this is all at the top of my head, and there's a lot more to it. So this is not meant to be fully encompassing. I just can't get the time to do everything I need to right now. So we're doing the best we can. But anyway, right, the seasonality, as I said, my recollection, I don't have the data in front of me, really July is usually a pretty good month. And because you've got those factors I already mentioned, which really have to do with anticipation for better earnings or beats. And we always talk about the beat game. And also, if you're in a bull market, you get a lot of legitimate beats that help drive prices up. Now, things are already at the all-time high, so you have to factor that in. I'm just listing these irrespective of maybe the market being overextended, maybe the market needing a short-term pullback, all that kind of stuff. M2 still expanding. We talked about this, as they would say, ad nauseum. This just to me is one of the key things where people have thought that this rally was a joke. There's unjustified, that the valuations are back up. A lot of that may be true, and other things may be true, but that's just the way the game works. And the more higher we go, the more pressure gets put on this gang that's apparently, I had to kind of getting back to more of a neutral, but more data's come my way that I've seen from different providers, let's put it that way, and it just looks like this is still the problem. So that's another driver. The inflation, again, I don't think any consumers are really enjoying it, but companies seem to be able to pass it along, and it's not really affecting most of them, just as is the case with a lot of these tariffs and things like that. So it doesn't seem to really be crushing the bottom line. So as long as that keeps working, right, that keeps helping. The Q2 EPS optimism is there. You've got the positive second half when you have a good first half, all that potentially as well. And you're also seeing where growth expectations are better for the second half of the year than they were for the first. And now I've already noted, right, that rate cuts are being priced in. So there's that anticipation that to what we already have, right, which are all-time highs, and I think you have a new closing all-time high in SPY and maybe the Qs as well. I'd have to look, but you to all that you are going to potentially have significantly lower rates in the not too distant future. So these are all things that are there. One other item that's just sort of covered, I guess, but I just want to reiterate that a couple of years ago I said it could take a while where I think that AI really starts making a difference because the hype almost always is in front of the bottom line. But I do, and I don't know this. I can't say that I can cite anything. But with a couple of well, two and a half years have basically passed since then. So yeah, I think you have to start thinking that they could start getting better bottom line boosts from AI at this point. Some of it, I can't say how much, but it could continue in that trend. Obviously, everyone I think knows that. And my point is, right, that even if the economy doesn't go as well as some are expecting, it may not matter because if that does start to kick in, the EPS levels will remain elevated as long as the economy doesn't tank or there's something horrendous that happens, news really derails it, it's going to be pretty hard probably for things to get ugly, right? That's probably what's going to happen, especially if rates are on the way down, so on and so forth. So just I would just keep that in mind that if you start seeing the economy really gets worse and you're thinking this could really crush things, if it gets really bad, of course, but if you don't see things really getting perfect the way they're expected to, that may not be matter if they start working the AI angle more and more. So I think after the run we've had, you might not get it on Monday. I think you might get a strong pullback. I'm sorry, you might get a pullback after the strong run that we've had. And so all that failure case we talked about possibly being there, that looks like it's possibly delayed. And I'm saying delayed because you have to, what you really have to do, I think, is let this breakout potentially run its course, right? So is this a real legit breakout attempt? And I'll bring up the SPY for that. But is this a real legit breakout attempt? Or is it a fake out, right? And so as of right now, you have to say you started the breakout attempt. Now what happens, right? And so very often we go through and we break out like we did here, and I'm going to point this out. This is February 19th, and I think, right, it's very easy to see what happened after we had a new closing all-time high right there in SPY, and it was ugly, right? So now, obviously, it's going to take news for that to happen, but a lot of technicians are going to want to see and prefer to see a nice pullback, probably back to today's low for starters, and then even back a little bit further, probably a little further towards maybe 605, right? So you're talking about 1% and then one more percent. You get that, your rising SMAs are going to come in right there. Okay, your shorties. And so that's really where you should start to see support somewhere near 605. If you get that hold and start going again, that's the textbook thing that a lot of people love to see. It doesn't happen all the time. They already did back things off today towards 610 anyway and held it, right? So if you're thinking, well, they kind of already did that. So you can't really be stunned if it doesn't happen right away or at all. Now, you're not that overbought on top of it, right? You could say, well, hey, after all this, aren't we overbought? Well, because they cooled things off the way they did on Wednesday and Friday from where they were on the highs, this cooled things off enough that you're approaching overbought on the daily, but you're not overbought, right? And even if you were technically overbought at say 70 or 71, I would not really panic about that, right? I would still be more inclined to be a quicker roller. But to me, right, you have room to go here. So my most likely scenario would be that maybe they don't do it right away. Again, depends on news, but they probably do put a little pullback together. I think without news, the pullback likely holds, right? Whether it's just 1% more from here, 2% from here. Without news, really significant news, I don't see why they would let this thing go now, especially with all those positive drivers that we just talked about. You might say, well, I think this whole thing is BS and it's going to be a failure. I mean, that could be true. I think you're really looking, you got to break that 20 in rising light blue. The cyan colored one is 600. As long as you're above there, it's pretty hard to say no, this thing is has it's over, right? You might be frustrated. It might turn out to be a weak breakout attempt and we need more time. But as of right now, a breakout attempt is underway. And if I'm them, which they don't often listen to me, but if I'm them, I pull back in the short term, get rid of even being close to overbought, give test former resistance, convert it to support, and then I just go. If I'm trying to do the perfect thing technically, but that would be it. And as far as where we go to, right, you have in terms of projections, I think there's a lot of room here. Now that you're through it, all that of course assumes that the breakout holds, and we don't get horrible news that completely reverses us, but you could even use this upper Bollinger, excuse me. So to me, like there's 3% more the way you're going. There's 3% more before you should have major worries of any kind. And I don't mean the news cycle. I mean overbought worries. So I don't see any problems there. So that would be my number, 630 and 600, and they're both about somewhere between 2 to 3% away, like they often are for the week. That would be my numbers in there. But I really don't see without news why this thing suddenly becomes a problem. I think they could use a news story to pull that off, certainly, but that's why you can't rest when there's a breakout starting and think you're about to, as I often say, start ordering motorboats with three propellers. Same thing here. I'm going to wait for this thing. I think we talked about this a long time ago too. I think there's another 2.5 to 3% there before you get near Bollinger's, right? And on your downside, probably 541. So you're down about 1.5%, and then your 20-day is at 532-ish, which is really where I'd start to say, oh, there's a problem. Now, if you're someone who wants to fight against this stuff, and I've done this before, but if you want to fight against things, probably one of the best ways to do it is to fight early, right? Pick your battle very early and do not overstay your welcome. But if you wait too long, you're giving up too much, usually because these pullbacks are shallow. But probably what you would have to do is use Friday's low, which would be 544.54, and you would look to get short beneath there and then see where the currents may take you. As I think you're fighting a pretty strong tide. A lot of things are arguing technically that we're not really overdone yet to start doing that. I wouldn't. It's not the fight I would want to pick myself, right? I just feel like no, there's better things out there, right? That you can find problems with. We even had a couple bears that worked out this week inside of a super strong market that had UOA. They at least started working, right? So I'd rather do something like that where I know other players ostensibly maybe, betting that things are going down. We have a new bullish idea in IWM, which I'm grateful for because all of you from last week know, right, in prior times when I like to see this thing start to go, and this thing is threatening to go again. And this is pretty big to be back above the 200 in purple, which would put it above all others again, right? So it's above everything at that point, and that's a really good sign. And you can see the intermediate term is there. The longer terms are still kind of muddled with the 200s flattening, 50 rising, but the 100 and 150 are still descending. So you have the shorties naturally rising as well. So overall, I would say you're neutral to positive from an SMA perspective. You're certainly not fully negative, that's for sure. And you can see the higher high, higher low. I think this thing extends out to here. I'm going to put that my level for that is I'm going to call that 222. So I think 222 is where you head to on the upside. Remember, this thing can have really strong weeks, but we have a breakout level above the 200. I don't think it made it there, but I'd keep your eyes on this one if this fun continues in the market, because I think there's a lot of potential here, and I think that really this is very close to important technical developments. So if they continue to have those, that's good. Now, one thing I'm going to show on this, and this is why these videos can get too long, and I'm maybe not the right guy for short videos. A lot of us know that. But this, I try to help out when I see things that jump out to me that I've learned, the hard way usually over the years. And I think I just saw one, and well, I kind of knew it was here, but I just kind of reminded myself to make a mention of it. But when you have a line like this one here that I'm pointing to, that downsloping resistance line, and you this is controlling, right, the dynamic, right? This, you just can't get through there. That's really where the buck stops as far as bulls go. When you're able to punch through like they did, and then get sent packing from the 200 back down to the 100 and hold, right? Then go again. Remember, this is now happening above the resistance, former resistance line. And this is often a really good sign for something like this that's a little bit bigger picture, longer term. So we don't want to get too far ahead of ourselves, but I will tell you that when that UOA hit, I just could not wait to get that into the log, because I think there's some important things that are shaping up there. It still has work to do, and we've been here before, and we can't get excited until we're through 245. But I think a lot of us would be happy to ride it to there in the short run. Anyway, but yeah, so I think that this is the level. You're 222 on the upside, because right, this thing can be volatile. I'm going to go with the 20 SMA is at 211-ish, right? So that's probably where you would get into more of a concern posture if you're a bull, or start thinking more about fighting the trend if you're a bear. Because the argument you could make on that would be that we have this fake out above the 200, we couldn't fire. So you kind of have a double top, and you have negative divergence with a higher high occurring down here and weaker indicator readings down here. So then that follows by weakness. You lose a key SMA in the 20, and that opens up some room down to the 150. Again, probably just a short-term trade, not really something that's, I would say, sets you up for longer term. But again, we don't know what the news will be if that scenario starts to unfold. That's why this whole thing's dynamic to me. I know some people just say, no, it isn't. It's all kind of foretold it. And it might be. And sometimes I kind of lean that way and think like some of these long-term price targets that I have are so ridiculous, and it looks like the stock's projected to go there. And then ultimately you wait long enough in the future and it does. And you're like, damn, I wish I didn't trade it and just, I wish I just invested in that one instead of trading it. But hey, you don't want to complain about good outcomes regardless. So naturally, the diamonds did their thing as well. They're at an important flat line juncture. But look, they're above all the SMAs again. They've got the higher high, higher lows. Their charts are shaping up just like you are with IWM finally. We all know that spiders and Qs have been looking, really, really good since the bottom got put in. And despite like a manufactured, I would say engineered path for higher, but regardless, it is what it is. So if you get through and keep going, where do you go next, right? And I think you have to say there's a flat line somewhere near. We're going to put a flat line right near, I'm going to call it 443. So not even 1% higher. And then there's another one that's going to come in off those lows and those highs. It's going to be up closer to here, and that's going to be about 447 to round it off. And at that point, you may as well just say 450, right? So there's some of the levels there. As far as the downside, I think you have to say with the 20 and the 200 all bunching up near 427. That's what you don't want to see. But backing up, towards 430 after this pop and holding, that would be a good development if you're a bull. You're not someone that's currently long, obviously, but if you're waiting to be a bull and you get that, and then they start to go again, that would be really good, because that would really back some of the short-term overboughtness out of it. Test former resistance, convert it to support, and then basically hopefully help springboard into a strong earnings season performance. But the other one I wanted to talk about was, I can't remember, something popped into my head. I think it was SMH. Yeah, I don't know if I mentioned this in a video. Maybe my pal Marianne will remember. But I remember thinking that SMH could get all the way up here and even further. And here it is. And the way that it did it, right, it's just kind of crazy the way things happen in real time. But things really happen the way they do. And that's big. My biggest thing where it's usually not the way it happens quite frequently, but not in the way that I expect it to. It just the path it takes to get there these days it just seems like it's quicker than usual. And in fact, I came across something where they said that this recovery from from high to low to high again is one of the fastest ones in history. I don't know. I did come across that I think earlier today, but here's Nvidia, and here's what I was looking at. And I had this is what kind of we put four names out in the momentum service every week, right? That's the idea to give folks four names. We highlight one as sort of the top name, and a lot of times that the factors that go into that are not necessarily the technical aspects as reflected on the charts. A lot of times those include bid-ask spread width, right? In other words, liquidity, options liquidity. We try to stay away from earnings so that a good trade isn't affected negatively by an earnings of a peer. All these little factors that we wind through so that we can decide like what's going to, for newer people, what's going to give them the best chance if we highlight just one name. But the whole point is the whole reason why four get put out is because you can't have a short list that's too short. It's good to have a short list, but it's not, in my opinion, but it's not good to have too short of a short list. So we don't know. For example, this week, PanW didn't really do anything, but we had SMH in that service, and all of you saw how much that really gave opportunity in terms of the movement potential. And NVIDIA was the name the prior week because I thought this was maybe going to happen at the start of, well, a couple of weekends ago. I thought this move would start to happen, and it didn't. And that's what happens. I find myself early a lot, and then the following week, things like this happen. Um, it just, that's why you got to keep these, even if things are kind of boring, you got to keep that alert set. It doesn't hurt you just to do an alert, and then you can come back to it if it's finally reacting or acting the way you thought. And so there was a little, this backed up this week, and actually there was a little trade maybe to the downside here that maybe made some money. But yeah, this was a very disappointing name because I thought this was going to participate and go. And I picked this as the top name along with Ryan, and we had other factors that really led us to that point, not necessarily the chart, like I said. But we didn't want to go back to Nvidia like 2 weeks in a row. And we should have, but we went with SMH. That was my little cheat to stay, so I didn't miss out on SMH. I mean on Nvidia with SMH as a proxy. I'll just fess up on that one. But that's my point, right? You got to don't get the tunnel vision. Don't think in one way. The more open-minded and open to change and looking at things differently and more about just being opportunistic rather than robotic, I think the better off you're going to be. I'm just trying to help folks that are on the newer side. So let's wrap up on the sector stuff because the sectors, I'm not going to belabor this, right? All the stuff that you would think would do well this week did well this week, meaning like your leadership, XLK, XLC, they did well. The financials did well. The discretionary is maybe breaking out. We put a target idea in. I'll be happy if this keeps acting well. I'll be happy to put more retail ideas in if they come in to the bull side. Transports are also on the verge of breaking out. Right, so it's very hard. And look at XLB and XLI. They're both right after being muddled for a while. They're both trying to ascend, and they're getting one's breaking out, the other one's attempting to maybe go and challenge the highs. So it's hard to report something bad about the sectors there. I mean, I think on balance, the sectors were fine or did well this week. As far as our quick view into the uh, simple, the plethora of market breadth indicators that we keep on this one view, this has gotten better as well, right? So you can see, right, that the advanced decline cumulative average, that is basically back near the highs. Your McClellan oscillators heading up. The summation index is back to heading up and nearing highs, right? Overall, and people will nitpick and say, well, you don't have stocks above the 50 and the 100 and the 200 the way that you have in the past. Yeah, but I'm not going to nitpick that while the bulls are this firmly in control. And there's a possible breakout unfolding, right? Why do you want to get hung up on that to keep yourself out of some trades when you see the kind of movement we've gotten from just a few of the ideas I was able to share this week? I just don't think it makes any sense to do that. And that's why like nitpicking, uh, it's probably good to be a nitpicker if you can keep it compartmentalized, right? Where you remember that this is not perfect, and then you go back and look at it, and if things have gotten worse, then you're kind of like, okay, there's even bigger problems here. But you could see that the market breadth is fine. It's solid. The sectors are solid, right? The leadership sectors did really well. But we do have Google ideas that I can share. Both Goog and Google are, well, they already started to take off today, and I didn't even know that. They were kind of bogged down. And I'm like, boy, I hope these aren't hedgers. I started thinking that yesterday, but now they finally have started to go. But I do think, remember, I was thinking that here, though, right? And this is again why you can't get comfortable on breakouts. But if this market goes for real, another 3% higher, I really, without news developing that's pretty poor, I'd be surprised if Google really gets left in the dust. And there were a lot of hits today that ended up being things I call catch-up trades, where they started coming in for names that have sort of been left behind, right? So with the way that Target stock has been treated, for example, look at how far off the highs Target is. And I'm not beating the drum on Target, like where I think there's a great fundamental story unfolding. I haven't a clue about that. But I can say that, right, this base is promising just because it's a base. And if you think about how far we are lagging behind because this stock has performed so poorly, they might start getting around to saying, we know what else can we buy up? Now the trend is still down. Look at all your SMAs, but in terms of could this start to catch up a little bit, put a little pop together, especially right if some we start seeing some better reports out of some companies and they're like, yeah, the consumer's doing pretty well, the consumer's hanging in there. You get some retailers to make comments, things like that. Could that start to spark up because, Target's so far removed, it's trading at such a discount to last year's high, right, at this point. Now there's got to be reasons for that, right, that I'm unaware of because I don't follow the company. But the UOA came in, and you can see that this stock is traded far higher in the past. It's not quite half of what it used to be, but it's not too far removed from being half of what it used to be. In fact, look at this, 270. I remember that now that it was up there. So this is obviously really, really uh, discounted from the all-time high. If there's anything good happening there, in your estimation, it might be one to research. If you can connect some dots on this, we did have UOA. There's an idea in there. There's plenty of catch-up potential, and there's some stored energy, and you have the early signs of a little bit better technicals developing. Not great yet, but if it does break out, right, there's no reason why you couldn't see a little pop at the very least develop. So that might be one to keep an eye on. And I'm trying to think of what else we've got. That there was one other thing that I might have to, let me see if I can get that other stuff back up here, because I think there was one other stock I think it might be worth mentioning. Another stock that continues to be somewhat squirrely is Ion Q, which I'll bring up. Let me just see if I can get some of these other ones up real quick. And I'm going to switch over to here. we're going to switch over to the main log view here. Oh boy, slow, slow, slow. And yeah, there's the target one. There was another one too. It might have been yesterday. It just by the end of the week, I've got to tell you. But oh, that's what it was. Thermo Fisher. So by the end of the week, with all the symbols I've looked at for all the different surfaces and UA hits and all that, this is another one. So I think I wouldn't say like we've got an idea in there, but right, it hasn't triggered. But yeah, you've got to be ready to go if they start to come in. If you start to see this market really go aside from IWM, if you want to look for some beaten down names and you start to see that they start chasing some left behind names, this could be one as well that they start to come after, right? So I also wanted to mention that XAU is still hanging in there, but it's sort of petered out right for now. So gold and silver indexes peter out. Silver itself is sort of petered out a little bit too. So we're just kind of waiting in there for more stuff. But the reason I thought of those at that time is because they have a super big picture cup and handle that launched them. And this Ion Q also is still maybe working on a cup and handle here that I think I don't even need to like really trace out for everyone to see. And as I've said, I really like this pattern. It's been a good one for me over all the years. And, I never hesitate unless there's other really problematic issues with getting ideas in that have UOA that support a cup and handle breakout. But yeah, if this thing, now granted, this is a really speculative name, and you were wasn't even a year ago that you were trading right in single digits, right, for this stock. So it is what it is. But yeah, this one here, if it does start to right the technical ship and get its act together, they bust this market out. This thing has a tendency to start really rumbling. So just keep that one in mind if the breakout scenario in this market given this cup and handle, if that starts to unfold, because that really has very significant, in my opinion, technical potential there. Let's see. So on that note, I think I've covered everything. I talked about breadth. Yep. So in short, the short term, intermediate term, long term trends all remain intact at this point. It's just we are in false breakout potential. Probably wouldn't be the worst thing to get a little pullback, and then finish strong in front of the holiday. That's something that usually happens. You have to, the positive drivers are there. We went through them all. And then I'd say, look, the market's usually solid in front of the big American holidays usually. So if there is a little bit of a pullback, if I'm them, I would have a little pullback on Monday, Tuesday, and then start turning things around Tuesday, into Wednesday, and then finish strongly on Thursday, and get everyone that's getting together for their Independence Day weekend barbecues and things like that. Everybody excited and happy about the market, which is what they seemingly, at least in my opinion, that's what they tend to do. But yeah, I think there's potential there, barring news. Like I really don't see why the trend doesn't remain higher here, with so many positive things they can work with seemingly on the horizon. So it's going to take news to really reverse this bad boy anytime soon, in my book, at this moment, right? Which is subject to change without any apologies. So on that note, I'm going to wrap up. I do hope that something I covered or shared with you this week helps you out in this holiday shortened week that's upcoming. I want to wish everyone the very best weekend this weekend. And if you don't tune in next week, have a great Independence Day weekend, a safe one. And yeah, we'll be back at it on next Thursday with another video. And again, I hope something helps you out maybe in the future if it doesn't help you out next week. So thanks for tuning in. Everyone, take care.